Hey guys, how are you? Okay, so BTC USD has triggered us, according to us, on its inverted HVF. I'll be showing you some charts, but just a couple of things to bear in mind. You've got to do 360-degree analysis. Here's an example of a technical analyst calling a short on the Litecoin USD, where I posted a reply regarding the same structure in BTC USD. In other words, it's an asset class aspect. It's an entire asset class aspect potentially on the majors. Litecoin is one somewhere around in the top 10, I don't even know what number it is now. But Bitcoin was doing much the similar. This went unresponded to, but this is set up similar to BTC. Why not deduce the entire crypto analyst class is due a substantial further dump? People pick a favorite coin, call quite a brave trade, sub $30 to $28 on something that's 109, but not see the potential for all of it to do. So this tests belief systems, and it's also, for me, a slight failing in assessment to have a look at every single coin in its current structure, and also to measure against the dollar. So the key learning that I changed in my growth into the crypto market is initially everything was BTC valuation. That was right for the time and the bull market. It was right for the time and the bull market. It isn't accurate, and it isn't the best way when the entire asset category is potentially in a correction. The other key point that comes out of it, we'll come back to this 45-minute view. The other key point is whenever you have a hyper valuation to the upside, people want to call the regulators in. This is what I'm saying. People want to call the regulators in on the shorts and the exchanges that are manipulating, and some of these stories, for example, that I've heard, but they weren't complaining when we went from 2,000, 6,000 all the way up to 20,000. So there's a couple of points that I just want to highlight. Some of this on a variety of mainstream media. But let's go back to the charts. This was a blow-off melt-up, and it accelerated immensely. You did a 10x essentially. In fact, you traded $700 on the lowest point in the beginning of last year. Traded $700 something and the lowest point. What's that low right there? Here's 2017, and everybody expects 742, and you closed at the highest point was virtually $20,000. Virtually 20,000 from 742, your lowest point. It's not the start date of the year. The start date of the year, if I put it roughly there, what was Bitcoin? The close was 999. There you go. You see it in the top corner here where the closes are. If I point where the date is, the close was 999. Where was it on the 31st of December? The close point at that point was already 13.7, but at some point during the year, it actually had 19,210, and it traded 19,550 on this particular trade. So that is a more than 19-time multiple in a single year, and the expectation is that this only goes up and there's night and no day, and that patterns and analysis and readjustments and blow-off hypervaluations don't have blow-off moments. And this hyperbolic move set up structure, and it is performing. So you see a mess of lines there. Okay, it's not very clear. I'll drop down in it. We'll spread them out a little. But this is a clear triggering event. This is what we teach on our program. You need a clear triggering event. It's a type 1. You'll learn what a type 1 is. Low 1, high 1, low 2, high 2. These were two big impulses. And this right there was your low 3. And very flat bottomed. We looked ideally for flat bottom, weak grind line across the lows. For those that say only 3 touches is the third break on the third touch is a false break. In many cases, I'm afraid it's not 3. You have 1, 2, 3 contact points, and you have broken it, and it's usually the 4th. So it's there's a law of the magic of 3, and you break on the 4th. You'll learn about that as well. And this essentially is a very deep, and we got most of our community almost entirely practicing defense. And the value add there is suddenly people are more open to the fact that you can't have a belief system about crypto. It is not going to go away. It is a massive development, but that doesn't mean it defies the laws of gravity, of human nature, greed, fear, overvaluation in a short time frame, and subsequent bear crisis. Just in the same way we had the .com and in any other asset class. That doesn't, however, mean the technology is worthless today, where before it was everything was just amazing. All it means is that you've had a break. So that's a triggering event. And it broke our low 3, which is what is required. That's a belt hold day almost. We've had a little bit of buyback. So I did a small loom for I've done lots of communication with my guys now. Essentially, since the low 2 was in, we've largely been inherently suspicious of what we've called the scenario B, the big sell-off. And this has been flat bottomed, and it was looking like it. And when it came down here, we were suspicious. That's not to say we get everything right. We absolutely don't. There was a chance this could have gone up to 8. It gave us, and we traditionally look for this in our inverteds, bear flagging as the final weak channel line. It gave us a bear flag. It touched once, twice, 3 times along there. You see these 2 gray lines across the tops. It gave us a rising wedge with a sell-off move, but it didn't have breakout momentum sell-off move, unlike this, which you can see is far more brutal. So you get the late bulls in and you sacrifice them, and the break takes place later. That removes all the bid money and the depth in the ladder, being late bulls into the first sell-off. And these were the wedges that occurred. The first wedge you broke, but you pumped higher. The second wedge you broke and you couldn't pump higher. That gave us our RH3, and this is now a hard line for us. Stop losses are there. The entry shorts should have been taken there. I actually didn't execute well on this at all. I got it sidetracked. We're getting bored. It's tight range, lots of key levels, but we nonetheless have made great money today. We've had a beer and we're enjoying it, mainly because we've had the right bias all along, and we quickly realized where we need to get short. This occurred Saturday night, and this is the Sunday night follow through. It accelerated from Saturday night. Why did it stall here? Guess what? Primer in the funnel. Yes, you had a primer. You'll learn about primers. This method is awesome. That's on the smaller scale, that is your low 1, high 1, low 2, high 2, low 3, high 3. You see that little dotted line stop and that little green entry? That was your traditional entry short if you didn't take the bear flag break. Yep, so you got 2 signals there, and you were getting impulsive after being really tight. So if you take that geometry, we project it downward, that gave you on the midpoint roughly that target you see there, and that's where you rested. That's how it works. Natural geometry of targets, however much you move to the upside, is how much you will move to the downside. In other words, the same time frame people that were acting long will act in a similar way when they're getting out. So there's a natural geometry. Only shorts work quicker and better. The true mark of a trader is someone who can make money both on the long and the short side. You are not an advanced trader until you've shown you can do that. I'm sorry to hear it, and I'm sorry to say it. Until you have a method that sees you be able to make money in the selling side, you're at highest level. Even if you're a brilliant executor in all other ways, you can only ever be a moderate intermediate trader. And this is a skill to be learned, and it's also great defense. In other words, large parts of this, we've been almost entirely in fiat, pledging our fiat as collateral and margin trading to the short side. This has been an exceedingly profitable period for me personally. The small move over here, as I say, is deep in the money at the moment, and 6-digit sums will be made or are made already, and 7-digit sums potentially on target if we play our cards right. And by the way, I'm not putting high probability on the geometry. I've said that this is late macro structure in something that's already lost 75%, so we'll retreat later. But I'm not intimidated by this. When you're deep in profit and you get this price behavior, it can rally as a bear flag. It can even rally more sharply as a rising wedge. Return move to our funnel, that green line over there. So those that have missed the trade, relative just-in-time entry, relative low 3 over there. and you might get the rally there. So here's the short. It's the confirmation. This reduces 85 to 90% of the risk on direction. There are mainly long callers in this game, mainly long callers in the game. In other words, this is belief system. In other words, this is a problem of mindset, not reading the charts, but seeing what you need to see in the charts to concur with your existing belief systems. This happens a lot in mindset of trading, and as much as it's been an unpopular message, we attempt to always call it like it is. And for those that say, oh, but your courses cost so much. If you have $50,000 and you were holding long throughout this, believe you me, instead of making money on the way down, you've lost money on the down. You've bought four of my courses at least. If you have a 6-digit sum, you have absolutely lost everything. It depends what value you put in it. We've done regular looms confirming that this scenario is a high probability event. Even starting after this breakout here and balking at the 10, following how deep we sold to this low 3, the confidence got higher and higher. This was actually, I thought it could even rally a bit higher. This has been really weak, little third impulse over here before the sell. That's such a cluttered chart now on the bigger time frame. I'll show it to you on this one. You'll learn how we use volume by price, what it tells you. You'll learn about key levels of significance. Note how we balked at the 8 after balking at the 10 on this one. We just couldn't do it. You'll see other aspects of the analysis, looking at the hyperbolic charts, the continuation patterns, understanding the context of the super macro. You've come from $182. That's right, $182. Let's just say that again. 12th of January, about 3.5 years ago, you could have bought on the low tick $175 one Bitcoin. You traded almost 20,000 at the top, 175 to 20,000. So if 20,000 dollars is a decent average everyday American car, fully spec'd with extras, let's say Toyota Corolla or something like that, you for $175, that probably, I don't even know what you'd buy with that. Maybe you'd buy a tool kit with a drill and a battery. That's the difference of what you've done here. You know, from $175, 10x is 1,750. 10x again is 17,500. You've done 100 times plus to that high point. How is it impossible that that this is not hyperbolic and can trade low out of us? And this is the chart I shared with a guy who was calling Litecoin down but couldn't see the asset category and the benchmark leader as being potentially down. Now, we aren't 100%, we're 95% sure that the direction is down and the impulsive move will go. Could it turn around and pump up now to the high? It still could, and the amount of times that's happened for me is exceedingly low. It's not never happened, it's just exceedingly low. It's exceedingly low, so on balance of probabilities, very high level of confidence, although I don't want to sound arrogant in any way. It could happen, but this is a very impulsive move to the downside. What's going to happen is support and resistance traders will get short roughly here, and that's probably the first time you'll have a decent rally. So the rule is the obvious support and resistance traders, both on this low and on this low, will probably get a short time frame rally. Remember, this is a week. You only need to do it for 2 or 3 days, and that'll shake them out before continuing to spill. This target at its extremity, as I've said a few times before, is now 1621. Does that mean it has to trade there? Well, in 18, my apologies, 14, it made its final inverted, but it didn't go all hunky-dory all the way. Silver that I treated as a similar analysis type. Note this rounded bottom and hyperbolic move. You can have this kind of structure with continuation down until you exhaust. You don't make a lower low, and then you start base building and getting upside continuations. And this will come back again, this period. I don't know whether it'll go with that hyperbolic again. It could do. But the buying days will return, but they aren't on the cards short term right now. So this is where I say this downside trajectory comes. This is a logarithmic chart, which is why that lengthened a little bit. And I'm showing you rough draw. give or take. I haven't put it on the perfect midpoint. So that's where we're at. This is Bitcoin. And this is what it's doing, and that's what it's done. It's not the biggest selling day forever, but I suspect there's possibility that certain candles, even longer than this one, will occur in its journey if it is to go all the way down. It can happen. This low, I suspect, will also be run. That means you'll be back sub the 6,000 level. We did bulk both at the 8,000 level up top here. So that's the 8 on the blue line. And now we are looking to threaten and not see again for a while, potentially, the 7,000 level. That line needs putting in, marking there. Will we now have the 7,000 level as resistance? That's what you've got to ask yourself. There we go. So let's just put that one in there. So what do you do if you've missed it? You wait for a rally to approach the 7,000 level and you get short potentially. That's what you could do. Sometimes tactically we say 50% of an impulsive move can be retraced. You don't always do that, but you might get a third of it and you might be able to get in short. The bias now has to be to the short side if you weren't already comfortable with that notion and you weren't already playing defense. And yeah, that's it. You know, the alts largely responded in kind. There's no safe havens in crypto. This was an asset category event, which is what took me to that very first clip that I was sending out in reply to the guy calling the short on Litecoin. Why are you not doing the all-round analysis? And you've got to be a global macro hedge fund manager. Your money can be anywhere. It can be sitting in fiat, it can be sitting in gold, it can be sitting in silver, it can be sitting in all varieties of fiat, it can be sitting in equities, it can be sitting in many asset classes. Why would you point out a fail in one particular coin in an asset category that has got similar DNA in the bigger primary benchmark of that category, aka BTC, Bitcoin? This is the signal that it's giving you. They all sold off. How did Litecoin do? Yeah, sure, it sold off. How did Bitcoin Cash, that we were getting seduced by for possibly on the upside, not realizing that this was the squeeze on Bitcoin Cash that was also on Bitcoin, they've all sold off. It's sold off as well. This is against Ethereum. So Bitcoin Cash has done worse than Ethereum. How's Ethereum done? That's how Ethereum's done, guys. There's your low volatility event. There's your squeeze. Go draw your inverteds in there. Overperformance to the downside. High volume. How's it done on the other coins? Litecoin, dollar. Oh my God. Yes, Peter was right about that, but he just didn't look at all of them. Look at that triggering event. Was it awful? Yes, it was awful. It was flat bottomed as all hell, and it's absolutely spilling like a monkey down a grease pole. But the point of the matter is the entire asset category is. That's the key thing. And there's no place to hide. If you sell Litecoin into Bitcoin, it's kind of like jumping off one burning boat into another slightly bigger, still on fire boat. There's no point. It's time to get out of burning boats generally. And there you go. So that's a quick run through. So a number of the charts. That's Bitcoin Cash against Tether on Poloniex. It doesn't matter which exchange you look at. The story's brutal. So we'll see what happens next. A possibility of a rally. There always is. You did just make a target there, by the way, and you have just triggered. We have our 5 stages of a breakout, and one of them is called the Feynman break. You could even go all the way back to the funnel, potentially. This is quite an assertive break, given the low vol that preceded it. So it's not looking like it, but deep downside awaits. Bias to the bear side, bias to defense if you haven't done before. Okay, that's it from me. Long old clip, but just wanted to get the charts up in front of you. This is the cleaner chart to sign off on. Very clear signal from BTC, the lead in the benchmark. Your bets are on for the market cap, and this points to market cap depreciation of some scale. You have Litecoin, you have Ethereum, you have all of the alts plus the benchmark coin all selling off. If you're a trader, trade the liquidity if you've got any form of size. And so BTC is the one for me. Okay, speak to you all soon. By the way, to find out more about what we do, and how you could have been playing defense. We're still running the how to play defense webinar, mainly because this entire theme that we've started for the last couple of months has all been about our fear regarding and surrounding the crypto market taking a dump. In other words, we are not cheerleaders for an asset class. We want to be in the asset classes that go up. In other words, the most important thing is looking after your wealth to further better your lifestyle trading existence for both you, your closest, nearest and dearest, and building your wealth, not from being a believer. There will be a comeback for crypto. It will be awesome. There will be bull runs again. It's just not the time now. So play defense and even learn to short and become that natural trader, and you don't need to be on the screens. Okay, bye for now. Go to themarketsniper.com to register. It's not for everyone. This is not advice, and only if you are serious at setting yourself free from the corporate realm and world so that you can become a lifestyle trader. Consider watching and registering. Bye for now.